Welcome back to Gold Rush Reporter, your trusted source for real insights into the world of precious metals. I'm your host and gold analyst, and today we're tackling an idea that always sparks debate. Is gold or silver really an investment? Now, I figure if you buy something, you can call it whatever you like. But every time I call gold and silver an investment, I end up explaining what I mean by that word. So, in today's video, we're going to clear that up once and for all. Let's take a step back and look at why someone would even want to save with physical metals in the first place. On one hand, it's the most basic question in this entire topic. But on the other, it's also the most important, especially if you're new to stacking. The simplest way I can explain it is by showing you why and how I personally do it. Because the truth is, what works for me might not work for you, and vice versa. So, I'll walk you through the universal pros and cons of owning gold and silver, and sprinkle in a bit of my own experience along the way. Now, one thing to make clear right from the start: I don't look at physical gold or silver the same way I look at stocks or ETFs. I don't trade metals based on price swings, and I'm not holding them hoping for fast growth. There are much easier ways to turn a small profit if quick gains are what you're after. I bring this up early because if you're new here, I want you to know this isn't a hype channel. I'm not going to tell you that buying gold or silver will make you rich overnight, or that it's the most important investment you'll ever make. It's not about hype. It's about understanding value. In fact, if you don't think of metals as an investment, you might already have the right mindset. The English language is funny that way. I still use the word invest in my head because I do invest in different things. I invest in metals, sure, but I also invest in the markets, real estate, my kids' education, even in fun. That word covers a lot of ground. Some of those investments are dollar-based assets and some aren't. But at the end of the day, I can always look at my physical metals and know what they're worth in the current market. So whether you call it an investment, an asset, or savings, it really just depends on how you choose to use it. Personally, I see it as all three. But here's what's important for everyone to remember. You're buying an asset with a moving price. Gold and silver aren't going to the moon every time you buy them. Their prices go up, down, or sometimes nowhere at all. They won't always track inflation or money supply perfectly. That's just the reality of it. And it's better to go in with clear expectations. Because yes, the upside potential is there, but not every positive outcome will benefit you directly. Some scenarios that might push gold's price higher are also the same situations you wouldn't want happening in real life, like economic collapse or political turmoil. So if you start from that understanding, you'll see the true purpose of owning physical metals. And from there, everything that comes after is a positive. Now that we've set the foundation, let's talk about the first major benefit of owning physical metals: their role as a savings account. When I mention that, I don't mean a traditional bank savings account that earns a fraction of a percent in interest. What I'm talking about is a store of value that you control, something outside the reach of banks or digital systems. Gold and silver have served that purpose for thousands of years. And even today, they do it better than most people realize. I've invested in all sorts of asset classes over time: stocks, real estate, even some crypto. But gold and silver have always represented stability. They don't pay dividends or offer flashy returns, but they hold purchasing power. And that's really what matters in the long run. When I was younger, I'll be honest, saving money wasn't my favorite thing. If I had extra cash, I'd rather spend it on experiences, gear, or anything that made life more exciting. I used to tell myself I'd save what's left. But the truth is, There's rarely anything left if you live that way. I think a lot of people can relate to that mindset. But over time, I realized that the people who were financially grounded had one thing in common. They saved first. They treated savings like a bill that had to be paid every month. That shift in thinking is what got me into metals about 14 years ago. At first, it was as simple as this. If I had an extra $40, I'd walk into my local coin shop and grab a few American silver eagles. If I had a little more, I'd save up for a gold maple leaf or an American gold eagle. There was something satisfying about trading cash for a tangible, beautiful asset I could actually hold. It wasn't just saving, it felt like progress. And it was easy to start small. I didn't need thousands of dollars to get going, just consistency. Every time I went in and saw the prices inching up, I realized something important. This was real money. It was teaching me discipline without feeling restrictive. That habit of buying small amounts consistently turned into a form of budgeting. I wasn't throwing money away on random purchases. I was converting it into something with long-term value. And in 2011, when prices began to skyrocket, I finally understood what people meant by the term hard asset. Now, I didn't chase that price run too much. I could tell it was getting overheated. My average cost for silver back then was somewhere in the mid to high 20s per ounce. Gold was doing the same thing, running up fast, only to fall back later. When silver dropped back down around 2013, hitting the low 20s again, that's when I started buying more seriously. Not because of hype, but because it made sense. I had learned patience. That's when my stacking turned into strategy. By July 2013, I was buying a quarter ounce of gold every month, just like a retirement contribution. I treated it as part of my long-term financial plan rather than a get-rich-quick move. That steady approach gave me confidence even when markets were volatile. Silver purchases slowed a bit after that, but I never stopped completely. I'd pick up a tube of eagles now and then, usually with pocket money. It wasn't about chasing profits. It was about keeping the habit alive. And looking back, that's what saved me from making emotional financial decisions. The regular, controlled buying, even in small amounts, was my version of paying myself first. By the time I started budgeting properly for metals, everything changed. I wasn't buying on impulse anymore. I had a clear plan. My goal wasn't to catch price spikes or short-term rallies. It was to build something meaningful and sustainable over time. When I look back now, that budgeting decision was one of the smartest financial moves I ever made. Because what I realized is that stacking gold and silver is less about chasing opportunity and more about building discipline. It's about protecting what you earn, piece by piece, and not letting your savings melt away into everyday spending. After 2013, gold and silver prices dropped quite a bit. A lot of people got discouraged and stopped buying, but that's when I leaned in. Every month, I bought that same quarter ounce of gold. No matter the headlines, no matter the price moves. And the funny thing is, the longer I did it, the less I cared about the short-term price at all. That consistency built confidence. It stopped feeling like a trade and started feeling like a lifestyle. I was developing a habit that made sense in any market, one that wasn't driven by emotion. Now, that doesn't mean I ignored what was happening around me. I kept watching the charts. I kept reading economic trends. But I never let that dictate my next move completely. Because gold and silver, at least for me, aren't about timing the market. They're about time in the market. At one point, I started diversifying my purchases. I got into 20 franc roosters, beautiful old coins with history behind them, and a few larger bullion pieces. But I always came back to the basics: American gold eagles and silver eagles. They were liquid, recognizable, and easy to sell if I ever needed to. And yes, I did sell some metals a few times over the years, usually to free up capital for something else. That's when I learned another big lesson. Not all gold sells the same way. Popular coins have strong resale markets. Generic bars or obscure coins, not always. So when I say buy the most popular bullion, it's not just about looks, it's about flexibility. If I had to summarize my stacking journey in one line, it would be this. Consistent purchases of recognizable bullion beat emotional buying every single time. That slow, steady approach helped me avoid two major pitfalls: panic selling and FOMO buying. When the market was hot in 2011, I sat out most of the mania. When prices dropped hard afterward, I didn't panic or sell at a loss. I just kept going with my plan. Now, after more than 14 years, I can look back and say that allocating part of my income to physical metals was absolutely worth it. It didn't make me rich overnight, but it gave me real security. It created balance in my portfolio and peace of mind in uncertain times. Another thing that worked in my favor was budgeting boundaries. I had a specific amount set aside for metals every month. That rule kept me from pulling money away from higher growth investments like real estate or stocks. Metals were never meant to replace those assets. They were meant to stabilize them. If I had gone all in on gold and silver, I might have missed out on the best performing parts of my portfolio. But by keeping metals as a steady savings component, I got the best of both worlds: growth from my other assets and stability from my gold and silver stack. Over time, that balance became my formula for wealth preservation. Not excitement, not hype, just consistent, thoughtful accumulation. As the years went on, my relationship with gold and silver became less about collecting and more about strategy. Early on, it was all about excitement, the feeling of buying something shiny and valuable. But over time, it turned into a disciplined, almost automatic habit that worked just like a personal savings plan. I realized that stacking metals was teaching me the same principles that apply to good financial management: patience, consistency, and clear purpose. I wasn't buying every dip or chasing every rally anymore. I was sticking to my plan, setting aside money each month, buying what made sense, and not overcomplicating the process. That approach kept me grounded through both bull and bear markets. When prices surged, I didn't feel pressure to chase them. When prices dropped, I saw it as an opportunity, not a loss. Because when you understand that metals are savings, not speculation, every price becomes an entry point, not a risk. There were times when life called for adjustments too. Sometimes I had to pause purchases to focus on other financial goals, and that was fine. Gold and silver aren't going anywhere. You don't lose your position by taking a break. You just resume when it makes sense again. One of the most valuable lessons I learned was how similar stacking metals is to maintaining a healthy savings account. You can't always predict when you'll need liquidity, but you can prepare for it. Over the years, I sold some metals, not because I wanted to, but because I needed to free up capital for better opportunities. And having that flexibility reminded me exactly why I started stacking in the first place. Unlike paper money that quietly loses value over time, metals don't erode from inflation or policy changes. They sit quietly, holding real purchasing power until you need them. That's why I often say gold and silver are not just investments. They're insurance. They protect your effort, your labor, and your savings from economic uncertainty. It's easy to underestimate how powerful that can be. When you've been stacking for over a decade, you start to see the compounding effect of small, consistent actions. Each coin, each ounce adds up, and before long, you have a meaningful position that represents years of financial discipline. What's interesting is that I never aimed for a specific number. I didn't set a goal like I need 100 ounces of silver or 10 ounces of gold. My only goal was consistency. Because over time, consistency builds results on its own. Even today, when I look at my stack, I don't think of it as a collection of metal. I think of it as years of smart decisions. Every coin has a story behind it. A time, a mindset, a goal. It's a timeline of progress, not just a pile of wealth. And if I'm being honest, it's also fun. There's something uniquely satisfying about owning tangible assets. Real physical money that no one can freeze, hack, or delete. It connects you to a tradition that's thousands of years old. Gold and silver have always been the ultimate form of savings. They've seen empires rise and fall, currencies collapse, and systems change, yet they've held value through it all. So, when people ask me today whether stacking metals is still worth it, I always tell them this. It depends on your mindset. If you're in it for quick profits, you'll probably be disappointed. But if you're in it for security, stability, and long-term peace of mind, it's one of the smartest moves you can make. So after more than a decade of stacking, budgeting, and learning through different market cycles, here's what I can say with full confidence. Buying physical gold and silver has been one of the most reliable financial decisions I've ever made. Not because it made me rich, but because it made me steady. There was never a 10x moonshot moment. No instant windfall or overnight success story. What I built with metals happened quietly, over time, and that's the beauty of it. Gold and silver reward patience. They move slow, but they move strong. And they remind you that real wealth isn't about timing the market, it's about time in the market. When I think about where I started, walking into a coin shop with a few extra dollars in my pocket, and where I am now, it's clear that stacking gold and silver has been more than just a financial exercise. It's been a mindset shift. It taught me discipline, long-term thinking, and the power of small, consistent action. Today, I look at my stack and see more than shiny metal. I see years of saving, planning, and adapting. I see a hedge against uncertainty, a backup plan that sits quietly in a safe while the rest of the world runs on digital promises. And while those promises can break, physical gold and silver don't. That's why I often tell new stackers, don't think of metals as something you'll flip for profit. Think of them as financial insurance. You hope you never need it, but you're always glad it's there. Now, let's tie this all back to the bigger picture. Precious metals aren't here to replace your other investments. They're here to protect them. They act as a store of value when everything else gets shaky. Stocks, real estate, crypto, they all have their cycles. But gold and silver? They've had staying power for thousands of years. So if you're building your financial foundation, consider metals as your anchor. Something real, simple, and proven. It's not exciting every day, but it's reliable every year. And maybe that's what true wealth is. Not just chasing growth, but maintaining stability. If you take nothing else from this, remember this one point. Consistency beats timing. Whether it's an ounce a month or a few grams here and there, just keep going. Over time, you'll build something that lasts. Now I'd love to hear from you. What's your story? Are you just starting out with gold and silver? Or have you been stacking for a while? Let's share some experiences in the comments below. Your perspective might help someone who's still on the fence. And while you're there, don't forget to tap that like button. It really helps the channel grow and keeps these discussions going. If you haven't subscribed yet, make sure you do, because I've got a lot more deep dive analysis and real-world insights coming up soon. As always, thank you for spending your time here with me on Gold Rush Reporter. I truly appreciate every viewer who takes the time to think critically about wealth, value, and financial freedom. Until next time, stay smart, stay patient, and keep stacking.